So it's a holiday, but we will still do business, and we will do it in 55 minutes. That's what we do here on Business Incorporated. You're welcome to the program. Here's what we have prepared for you. In Nigeria, inflation eases for the second consecutive month. I wonder how this plays out with your purchasing power. A lot has been going on between Dangote Refinery and NNPCL. We'll give you the details and a whole lot more on the show. Food exports in Egypt surges 7.7% for 1 week. Good afternoon, I'm Ini John Mekwa. This is Business Incorporated on Channels Television. We'll start from the global space. Gold prices surged to record highs. Started on Friday, continues till today, Monday, driven by softer dollar and expectations of a larger interest rate reduction by the United States Federal Reserve. They will be meeting this week. We'll keep our eyes on the number now, and then we'll see for spot gold, it's up 0.5%. $2,588.29, building on that all-time high of 2005 that it hit a bit some time ago. That's per ounce. U.S. gold futures also up 0.2%. $2,589.23 per ounce. And then a holiday in China, Japan, Indonesia, Malaysia, and South Africa. I guess we should also add Nigeria. Those are the countries that are facing holiday at this time. But mostly these prices are driven by a weakened dollar. 0.2% makes gold, less expensive for other currency holders, and so it increases demand from that. And of course, we're counting that to that Fed cut expected this week. Data on Friday showed that U.S. consumer sentiment improved in September amid subsiding inflation, though Americans remained cautious ahead of the November presidential elections. A big one right there. Now, look at other metals also. Spot silver we see is up 1.2%, $31.02 per ounce. Platinum up 0.4%, $999.38. Palladium up also 0.7%, $1,075.60. I guess by the end of this week, we'll see where all of these land. All the calculations as to the rate cut expected from the United States will certainly bring that to rest. Now we come to Nigeria. Good news for a second month, and for the month of August, headline inflation further eased to 32.15% relative to the July 2024 headline inflation rate, which was at 33.40%. Well, I have to add that FDC, Financial Derivatives Company, got this one this month. Well, looking at the movement, the August 2024 headline inflation rate showed a decrease of 1.25% point when compared to the July 2024 headline inflation rate. However, on a year-on-year basis, headline inflation rate was 6.35 points higher compared to the rate that we had at this time last year. That was August. Then it was 25.80%. This shows that headline inflation rate year-on-year basis increased in August 2024 when compared to the same time. But compared to the preceding month, which is July, there was a drop, the second consecutive drop. Furthermore, on a month-on-month basis, the headline inflation we see for August 2024 was 2.22%, which was 0.06% lower. So we'll have a conversation on that tomorrow. You don't want to miss that Business Morning. See what that means. Has prices really gone down? Especially now we're talking about the price of energy. So we see this drop in inflation number mostly driven by food prices. We know it's harvest season, and some of those efforts by the federal government have driven this down. But what's going to happen in August? Join Ladi Williams tomorrow 10 a.m. for that conversation. Now let's go to the oil space right now. Oil prices stabilized on Monday as ongoing disruptions to U.S. Gulf oil infrastructure balanced persistent demand concerns after a fresh round of Chinese data, while investors still await the interest rate cut that is due this week. Let's keep our eyes on the numbers right now. This is the features for November. You know, as the month ends, then we get into new features because it's always contracts ahead. So for Brent, $71.72 after it went up 0.2%. WTI of the United States, $68.88 after it gained 0.3%, and the market is likely to remain cautious until after that rate cut that is expected later on this week. Also, traders are increasingly betting a rate cut of 50 basis points instead of 25. Last week, it was more traders talking about 25 basis points, but now it moved to 50 basis points from the traders' point of view. Now, we're still talking about oil now. The controversy that's still trailing the PMS price supplied from Dangote Refinery. The Nigerian National Petroleum Company Limited has given a breakdown on price paid to lift PMS. That's what you have right. According to the NNPCL, the estimated pump price in Lagos will be above 950 naira 22 cup. I think that's where they put it. The entry pricing of 736 naira per liter. And then they went ahead to tell us some of those fees that make up the price at the pump. NMDPRA fee of 8 naira 99 kobo, and then inspection fee 97 naira. 97 kobo, beg your pardon. Distribution cost for Lagos, they placed it at 15 naira. It's interesting to say this. I don't know. This is the first time we're getting breakdown of what makes up a pump price from NNPCL. I wish we would have more of this and it's more consistent. I get that the NNPCL may be able to win the trust of Nigerians, because I hear a lot of people say even when NNPCL is telling us what is supposed to be the truth, we don't know, we don't want to take it. So I don't know, but I mean, this comes out well, I guess, and a lot more people, to endear more people to the NNPCL. Now, there's been a response, obviously, as expected, from Dangote after they said, that NNPCL said that they bought from Dangote at 898 plus and everything. So Dangote has responded, and they described the reports by the NNPCL that PMS was sold at 898 naira 78 kobo to the NNPCL as misleading and mischievous. That's what Dangote says. And according to a statement signed by the Group Chief Branding and Communications Officer, Anthony Chejina, Nigerians should await the announcement on pricing by the Technical Subcommittee on Naira-based crude sales to local refineries. You know, this is supposed to start by 1st of August. So products were sold, they say, in dollars to NNPCL, but with a lot of savings compared to the price that NNPCL currently imports at. Dangote Refinery assures Nigerians of availability of quality petroleum products and an end to fuel scarcity in the country. Now, the third leg of this story is that NNPCL has also shared a breakdown of crude availability to Dangote refining, and started from December 2023 up to now. NNPCL said they're supporting local refiners in the country, and they're doing prompt delivery of crude deliveries to local refiners. Data from NNPCL showed that December 2023, a total volume loaded and delivered to Dangote, total that's up to October, is 48.62 million barrels of crude, with, of course, that's payment in dollar. Payments in naira is supposed to start from October 1 now. Experts believe that payments in naira for crude and petroleum products would lead to less pressure on the naira, and that we may see the results in the country reflecting in the value of the naira. As expected, foreign investors are keenly watching the investment journey of Dangote Refinery to see how to plug into investments in this refinery amidst all of this murky water that we see. And according to Mr. Farouk Kailan, the Chief Executive Officer of Premium Africa Holdings, he spoke during our business morning earlier to say benefits of crude oil being paid for in naira and the domino effect on the strength of the local currency cannot be quantified. He was a guest on Business Morning earlier today.
Value chain of petroleum supply. Once it's become localized, then indeed you also understand that logistics would also provide a very important opportunity for those who want to enter the space. those who would also need capacity enhancement would also reach out to international community. The international community investor community has always find it difficult to plug in. They say blessings can come in different ways. It's a blessing in disguise. Others have been at the doorway trying to find themselves in. And this one offers a very important, dynamic. So what you realize is that this logistics conversation will start happening. Those who see Nigeria as a powerful force would also start, expressing their interest. And then definitely it would all translate into more investments coming in. What excites me particularly about this one is that, yes, indeed, transactions will be done in the local currency.
All right, so that's from Business Morning. Now, of course, we're going to build on that conversation right now. We're speaking to Mr. Majid Dahiru. He's the Executive Director of Makira Global Security Services Limited to tell us some of those, a lot of drama we've been seeing right there. He joins us from our Abuja studio. Mr. Dahiru, good afternoon, and thank you so much for joining us on the program.
Good afternoon, and thank you for having me.
So tell us about where the consumer is in all of this. We've seen Dangote. Dangote is a business. We're excited that PMS was ready. Now is being loaded by the NNPCL, whom we know for now they will be the only off-takers. But we are seeing this issue of pricing. NNPCL said they sold 898, and Dangote said they did not. We now see the price moving even for NNPC petrol station. Where is the consumer in all of this, really?
Well, the consumer, contrary to expectations that when you have locally refined products, that the prices might, be crushed below the prevailing market rate. But the reality now is that it's not exactly going to be like that, and it is not a far-fetched reason. This is because the oil and gas industry in Nigeria is deregulated and it is internationalized, if you ask me, to the extent that local entities operate as though they are operating in line with international pricing mechanisms, particularly for the purchase of crude. So Dangote is a commercial enterprise. It has set up its refinery with commercial financing at a cost. It has also purchased crude oil both within and outside Nigeria in dollars. And so all of this is going to factor into its production cost. So the difference between imported, petrol and the one that is refined in Dangote will just be probably freight and insurance. Otherwise, there won't be much difference. And so anybody expecting anything less than what we are seeing today may probably need to understand how the inner workings of the oil and gas industry in Nigeria is since the advent of the PIA. And so for Nigerians, the story remains unchanged because, yes, for a country that is a 30,000 naira minimum wage a month country, you will agree with me that petrol prices at the prevailing rates are way beyond the affordability threshold of Nigerians. And so energy poverty arising from unaffordability of Nigeria's most utilized energy product, which is petrol, will prevail for a longer time than we expect. Otherwise, it's heartwarming. It is, a cheery news that for the first time in about 3 decades, we have the capacity to refine locally, even though it's by a private entity. That is a milestone. At least that will guarantee availability. But affordability is another ballgame entirely because, again, Dangote is a commercial enterprise.
Yes.
It's a business.
Yes, Mr. Dahiru. Mr. Dahiru.
Profit-oriented enterprise.
Yeah, Mr. Dahiru, a lot of Nigerians are also excited. Even personally, we're happy that we have a local refiner. But, when you look at the sentiment around what has been going on since Dangote started the production of petrol, first they started and they said they were waiting for NNPC to come and, offload. Now, NNPC takes up, and then we are having the controversy of how much they bought and how much they did not buy, how much will be sold to the people, to the consumers. And then one will wonder, what is the true picture? Because you talk to a lot of Nigerians. I've had a lot of conversation with analysts and experts in the industry, and there's a lot of expression of lack of trust on the activities of the NNPCL. And these are the issues that actually bring this up. People really want to know what is going on. Why is NNPCL saying they're buying at 898? Dangote is saying that's not how much they sold it for. And then suddenly we now know how much NMDPRA fees cost and all of that. You know, all of this bring about some sentiment in the mind of the consumers.
The current entanglement between the NNPC and Dangote refineries gives an impression of a marriage that is forced by forces beyond the control of both entities. I say this because ordinarily one would have expected Dangote to flow this product into the market, given the fact that it's now a free market-driven enterprise and sector, given the fact that the downstream sector of the petroleum industry has been deregulated. One would have expected him to name his price and distribute freely to willing buyers and willing off-takers, rather than opting for this, entanglement with the NNPC, with the NNPC being the sole off-taker. I think it's a marriage of inconvenience, and it's now throwing up, speculations, if not conspiracy theories, about what exactly is behind or responsible for this kind of arrangement, even when Nigerians are going to buy this product at a higher price coming from a local refinery. So I think that what is wrong with this whole arrangement is this idea that NNPC is going to be the sole off-taker. Well, the NNPC, which initially said that Dangote was free to distribute to all other willing buyers, eventually has become the sole off-taker. And they've named the prices at which they actually bought the product from Dangote, which is quite, for me, is a good move towards transparency and openness. So if the Dangote refinery is disputing the claim by the NNPC, I think the best thing would be to actually name their own price, their pricing template, at which they sold to the NNPC. I think that will just clear the air and it will reduce the controversy around the pricing. I don't think this should have generated this level of controversy. All that Dangote needs to do is to simply say, look, we sold at social price to NNPC. If the price that NNPC has stated is quite different from what, in its own estimation, is the case. So I don't think that that's much of a controversy. What I think should be done now is for the Dangote refinery or its promoters to come out clearly and state the price at which they sold to the NNPC when they started lifting yesterday.
All right, and then the other thing is, we all know, it's no longer a secret that there's been the subsidy element, whatever name it's being called. Nigerians were not paying for petrol at the pump at the price that it would have cost. We do know there was an intervention by the government, and we did hear the Federal Executive Council, I think a subcommittee, also meeting to determine the price. So I'm thinking now that the NNPC is saying it's going to cost at least 955 naira for a litre, is the subsidy element out?
That is what we don't know yet. I'm sure the NNPC too will have to also be forthcoming on that. Because recall that a few weeks back, the NNPC came up to admit that they were indeed subsidizing petrol through under recovery, and it has actually plunged the company into a $6 billion debt burden. And so, based on that, the adjusted price is upward. So I expect the NNPC to also be forthright on that to say whether or not this price is reflective of the market rates or otherwise. Now, on the part of the federal government, this other arrangement about the Federal Executive Council set up a committee to determine prices that the products from Dangote will be sold is also very ambiguous, nebulous, and not very clear. If the government wants to subsidize petrol, given the social consequences of the high price of petrol in Nigeria and even its economic impact, the government also should come out clearly and state it as that. And there's nothing wrong with subsidy. For some of us, we always advocated that subsidy is a useful instrument to guarantee the affordability component of energy security. But this cannot be done at the expense of the earnings of NNPC. And that is what has been wrong with the subsidy that was partially restored since August last year by an administration that claimed that subsidy was gone. The burden of subsidy was being borne by the NNPC, and that is not how it's supposed to be, because it's a federation issue. It's a matter of priority. It should be a matter of priority for the Nigerian Federation. So if the government intends to subsidize PMS, be it imported PMS or the one that is locally refined from Dangote refineries and another, refineries operating in Nigeria, the government must make an appropriation for that. And also probably look at the PIA and adjust or amend any relevant section that prevents the government from actually dictating prices or determining prices through the instrumentality of subsidy and other forms of intervention to bring down the prices. I say this because, yes, Nigerians would want, cheaper sources of energy for their economic activities. And at the current rate, it is way beyond the affordability threshold of Nigerians. But that is a decision for the federal government to take as a government, as an administration, and not for a company like the NNPC to take. So it's a responsibility for the federal government. And I think that in doing this, I do not think that the old method of NNPC being the sole importer of petrol or being the sole off-taker of petrol from Dangote will be the solution. I think there should be an appropriation for this, a proper agreement between the government and Dangote.
All right.
So you can subsidize Dangote adequately to achieve a price that you consider as being within the affordability threshold of your citizens as a government.
All right,
that
Mr.
should
Dahiru.
be between the federal government and Dangote. But until then, I think Dangote should just do business with NNPC and other willing buyers of his product on a willing buyer, willing seller basis in line with what the PIA has actually dictated.
All right, Mr. Majid Dahiru, Executive Director, Makira Global Security Services Limited. Thank you so much for your time this afternoon.
Thank you very much.
We do have another side to this conversation, but that's after the break. Stay with us. Welcome back to Watching Business Incorporated on Channels Television. We continue with the energy security or energy affordability conversation. Now we're doing this with Calvin Emmanuel. Calvin Emmanuel is a financial analyst. Joins us also from our Abuja studio. Calvin, good afternoon. Just when Nigerians should be celebrating availability of locally refined petrol, we have all of this, uncertainty, information mix-up to deal with. Dangote sold at this price, and this one sold at this price, and then pump price has now gone up again just a couple of weeks after we had the new price from NNPCL. And I'm wondering, should we be regretting that we now have a local refiner of petrol?
Thank you so much for having me. To be honest with you, the body language that the government has shown and NNPC has shown doesn't appear like they are excited about the Dangote refinery, because despite the pomp and pageantry of yesterday, the Minister of Finance and Coordinating Minister of the Economy went there with his team. Only 67 trucks of 45,000 litre size took products from the gantries at Dangote refinery yesterday. Only 67 trucks. The government said that they had up to 300 trucks mobilized. Actually, only 67 trucks took products. And as we speak, about 193,000 metric tons of PMS, substandard PMS, by the way. And the reason why I keep emphasizing that the PMS imported into Nigeria is substandard is because despite the fact that it's imported at 70 cents per litre, which is 15 cents higher than the price at which Dangote is giving them ex-refinery price plus levies, you have a situation where the government says it wants to try to do backward integration and take products from Dangote refinery, but then it goes ahead and still goes to import 193,000 metric tons of PMS, which is landing in Lagos this month of September. Now, NNPC released a statement and says that, they are trying to blame Dangote refinery for the increase in price of PMS. But if you realize it, the major issue that drives the price of petroleum derivatives at refinery usually are, number one, the price of crude oil, which hasn't changed much because Nigeria doesn't have control over the price of crude oil. Out of about 32 million barrels that OPEC members produce on a daily basis, Nigeria contributes only about 1.5 million barrels to that. And the exchange rate, okay? So at 1,635, 1,645, Dangote is selling plus levies because Dangote is operating in the free trade zone plus levies. And I'm adding that deliberately, plus levies. Dangote is selling at 55 cents on the dollar. If you're selling at 55 cents on the dollar, and in neighboring Ghana, that is like 1 hour, 20 minutes by air from Abuja, they are selling PMS at $1.30, $1.40, In Canada, they're selling PMS at $1.70. In Singapore, they're selling the same PMS at $2.70 per liter. Dangote is bending over backwards for Nigeria because it will be more profitable for him to export the PMS produced in Nigeria than for him to sell it to Nigeria. But given that NNPC is owing international traders, it's owing traders $6.8 billion. And one of the reasons why I'm telling Nigerians that Nigerians would rather believe Dangote than believe NNPC is because in August, NNPC denied they were owing. The first week of September, they came back and acknowledged they were owing traders. And the duration for that contract has expired. They are currently in demurrage period, which means they are paying about, based on my calculation, $1.3 million in interest on a daily basis to traders they are owing, that they neither have the crude oil feedstock or the cash to pay. By the way, the products they took from Dangote refinery yesterday and they will take for the most of this month is actually not cash backed. They didn't pay cash for it. They had to secure letters of credit from a multilateral development bank. So the confusion around this and the body language has shown that clearly NNPC is not happy that Dangote refinery is on.
Well, that's sad because, I mean, we saw the minister there, we've seen government officials there, which is supposed to be a form of endorsement. And also, we do know that having a locally refined petrol is supposed to at least cut off or at least reduce some of those logistics costs that is involved in importing it into the country. And as many people have said, even if a local refiner is being subsidized, it's better for the economy at the end of the day. And then the other one is at least a little bit of hope for the Naira and for Nigerians as the consumers. So I wonder where the consumers would go to now. Dangote is a businessman. He has to make back. He has a $20 billion investment right there. And if Nigerians cannot trust what the NNPC is saying, then they're just left in the middle with nowhere to turn.
Look, Ini, so the landing price for the PMS they bring into Nigeria is 1,165, 1,170 naira per liter. That's the landing price. Yeah. Before now, NNPC was applying nearly 550 to 600 naira subsidy per liter. NNPC claims that Nigeria consumes 70 million liters per day. I say Nigeria doesn't consume 70 million liters per day, and this is the reason why I say so. In 2002, Nigeria was consuming 21 million liters. In 2003, it went up to 25. In 2006, it went up to 26 million. In 2008, it went up to 27. In 2009, it went up to 29.1 million liters. If you consider the compound average growth rate of the demand, daily demand of PMS in Nigeria, it grew at 11% between 2002 and 2009. All of a sudden, between 2009 and 2024, the daily demand jumped by 234%. From 29.1 million liters, it went to 70 million liters. The government cannot give you empirical data to justify that. The number of cars that were imported between 2009 that justified a sudden spike, the number of tricycles, the number of generators, the population growth rates. Did the population of Nigeria triple or quadruple within the intervening period? The answer is no. So why the sudden spike? Why can't the government justify it? Last year, the government said that the true consumption was 41 million liters, and that lasted for only 2 months. So how come all of a sudden that number has jumped back to 70 million liters? And could it be that the fact that the government is not transparent with Nigerians on the actual daily true north of the daily consumption of PMS be the reason why the government is not able to apply under recovery for subsidizing petrol to Nigerians? Look, Dangote as a company, is a private company, it doesn't have the authority to set the price of PMS. It cannot come and announce the price of PMS. And the reason is because based on sections 205 and 206 of the PIA today, NNPC is the sole buyer of PMS from Dangote refinery. If NNPC claims that the market is deregulated, number one, it will issue a statement based on FEC approval that the market, based on section 205 and 206, like it did for AGO, it's been deregulated. And it will not be the sole buyer. It will allow Ipman, it will allow Moman to come and buy products from Dangote. Why is NNPC the sole buyer? So these are questions we have to interrogate and ask ourselves to understand. And combined with the fact that Yesterday, there was a huge pomp and pageantry. There was a ceremony that was covered by the Nigerian media and international media, everywhere. Press statements, release, and acknowledgement, yeah. But only 67 trucks took products yesterday. And there is evidence to show, as we speak, that about 193,000 metric tons of products on different vessels are on its way to Nigeria this month. So does it make sense that you have a brand new refinery that is functioning, that is currently at 72 to 75% capacity utilization, that imported about 9.7 million barrels and sourced products in dollars from other operators in the US, in Brazil, and in Nigeria, and paid in US dollar, bought 5.3 million barrels worth of crude oil in US dollar, and has the capacity to refine and solve 100% of Nigeria's fuel needs. But you still have a state-owned company importing PMS into Nigeria. By the way, that is dirty fuel. Does it make sense? This is the question we have to ask as Nigerians.
All right, Calvin, a lot of questions there, very small answers, a lot of questions. As the media, we will keep asking these questions and probing, and hopefully we would have, the NNPCL, or is it Dangote, the Federal Executive Council, talk to us as Nigerians so that we know exactly what the real picture is. I mean, if we could have Dangote with a lot of trucks waiting to be offloaded, and yet we have imported petrol on its way to Nigeria, I mean, it leaves a whole lot of questions and concerns right there. But thank you so much. That's the much we can take. Unfortunately, on live programs, you have, very little time to address some of these issues. But it's a continuous conversation, and thank you so much for your contribution this afternoon.
Thank you for having me.
Let's head to the markets now. We're almost out of time. We're taking a bit of that time from Will, but Will, I'm sure you don't mind, because if you're able to buy petrol,
no, I mind, because I have like 60 trucks of markets to upload, and they've only taken 3.
I'm going to call the NNPC. Yeah, I think they need to head to your backyard and get some of those trucks of petrol. All right, Will, yeah.
So we just kick off, as always, let's check in on the markets. But Nigeria is on holiday for the Muslim holiday today, seeing sentiments in the markets that we're trading, the two key markets. We see South Africa and Egypt in negative sentiment. Nigeria's NGX, as I said, they're on holiday, but it closed on Friday in the green, and the week in the green as well. We see up 0.44% for Friday, still at 97,000, holding that level there. And we hope that it's, when we resume trade tomorrow, we'll see that bouncing back and continuing that uptrend. Let's see JSE. That's the JSE in South Africa is down 0.17% at intraday. Let's see how Egypt performed at intraday. It was also down at intraday, 0.37%. But let's see how Kenya closed the market on Friday. It was in positive territory, and we hope that, at the close of business today, we'll see a better, more like an uptrend, continuing for African markets. But let's look forward. When the markets open tomorrow, what's going to happen? Are we going to sustain that trend? Inflation numbers are out. What's going to happen to the markets? And we have Mr. Rotimi Fakayejo, is a capital market analyst, is joining us this afternoon to share his thoughts. Good afternoon, Mr. Fakayejo. Mr. Fakayejo, this is a holiday. Thanks for joining us, first of all. The MBS decided to release the August inflation numbers. We were expecting that yesterday, but came in today. Headline inflation came in at 32.15%. And this is below in expectations, because just slightly below expectations. Some analysts had predicted 32.46%. But we did see this coming in at 32.15%. Also, core inflation trending upward. However, food inflation trending lower as well. But does this downtrend, we just want to know, does it align with market realities, or is it just something we're seeing on the papers?
Well, it does. I think it's a very cheery news to the entire people of Nigeria, and very much so to those who are in business. Because there's been a lot of anxiety whether the drop in inflation rate is going to be consistent, and that has been brought to bear that, yes, we are to expect something much better. And I think it's going to create much more transactions, much more volume in the equity market, and that also will imply that the rate at which the market will go up will also be implied. And as such, we believe that everything is going to be in sync. One thing that is very key is that with what we have seen so far, a lot of things are coming to play. The government is making frantic efforts on all fronts, but we are yet to see results. So the results will come in trickles, and thereafter, people will begin to see that, yes, indeed, there is light in the tunnel, and we can see the light. Though it may still be far, but definitely it's going to get brighter.
That light, you say, is really far. My colleague usually says, hope it's not a freight light, a train coming in to crash. But looking at this, we can't but speak about what's happening, the lifting of petrol from Dangote refinery and the publishing of the selling price by NNPCL at 898 naira. So they say alleged price that they bought from Dangote. Do you see, and now we're seeing the price at 950, say about 950, 22 kobo for Lagos State, 999 for Abuja and other states, over 1,000 in Borno State. Do you see any respite for Nigerians and business, especially now with the expectations has been that when Dangote refinery kicks off, we'll see a downtrend in energy costs, and that means the trickle effect will be that businesses also see lower costs because of energy costs will be lower, transportation costs will be lower. But right now, do you see that respite coming in, especially when the CBN is going to meet next week to hold the meeting, the MPC meeting?
Well, we know fully well that increase in fuel price in Nigeria always bring Hydra-headed problems. And we fully know that what are responsible over time. But what is happening currently is not in the best interest of Nigeria, in the sense that there are rumors flying all over, and the NNPC had come out to refute that, the same way that Dangote has also refuted what is in the public domain. I believe that until a positive statement comes from Dangote Refinery, because Dangote Refinery has more stake in this situation than the NNPC, and Dangote Refinery is the one that has invested. We know all the things that NNPC has done to Nigerians over the years, and we believe that this may be the way to break out of the shell that we have been kept in over the years. So I believe strongly that Dangote Refinery has brought peace and also stability to the system. So by the time the price comes out, because what we see right now is that what they may be selling is based on dollar priced crude that was supplied. But from October, we're going to see Naira-based crude being refined and being sold to the public. So I believe at that point in time, we're going to see a better pricing, which is going to be much lower than what we are seeing. And I want to beg that Nigerians should free themselves from the blackmail that is all over the place to bring down this economy and also to bring down Dangote Refinery. So I believe strongly that things are going to get better, because when we have price stability, people will be able to plan, and much better results can come thereafter.
We do hope so. We do hope the Central Bank's Monetary Policy Committee will decide to hold or cut rates, seeing that inflation is tapering. Thank you so much, Mr. Fakayejo, Rotimi Fakayejo, Capital Market Analyst, for sharing your thoughts this afternoon.
My pleasure.
So any other thoughts of analysts? Just seeing that I have similar consensus with Calvin there. Optimism, cautious optimism, especially when it has to do with Dangote. It's a very, very, very dicey topic. Yes, and we hope that Nigerians all come together. This is the time we need to come together and, resolve this matter.
Nigerians will come together with the government. All right, Will, thank you so much. Well, talking about cautious optimism, that seems to be the theme, the third quarter of manufacturing outlook survey for the UK for British over there. Let's find out what the outstanding factors are. Looking at that cautious optimism by manufacturers, according to a survey. Hi, Juliana. Good afternoon. So what are the outstanding factors in this cautious optimism of the survey?
Good afternoon. Cautious optimism appears to be the theme of geopolitics and economics across the world. And you've quite rightly attributed that to Make UK's quarterly manufacturing survey, which was released early this morning. A really important survey, actually. In fact, I think economists here in the UK look at this outlook as the bellwether for how the UK is faring across the world, particularly as, of course, manufacturing is very much about exporting, and it's gone through some extraordinary times over the past couple of years. Began with Brexit, of course, and that changed the nature of how we deal with our European trading partners. And then we had the COVID lockdown, which prevented many exports. And then the subsequent wars have caused issues when it comes to transporting, particularly around that very lucrative Suez Canal. So it is negative and positive. Negative because of all the reasons that I've just listed, but predominantly due to Brexit, because we know that UK manufacturers were primarily transporting to our European partners. That has all changed. However, Sir Keir Starmer, the UK Prime Minister, is actually in Italy today having discussions with his counterpart there. And he has spoken and spent time with Emmanuel Macron and Olaf Scholz in Germany and France, not to bring us back into the single customs union, but to renew those relationships. I think he called it a Brexit restart. That was the phase. And that optimism has been displayed in the manufacturing survey that Make UK have released today. Also, as well, we know that there doesn't appear to be any new flare-ups of geopolitical tensions. Of course, we're still keeping a close eye on what's happening in Russia and in Gaza, but it appears as if manufacturers and SMEs in the UK appear to be adapting to some of these geopolitical tensions, which is why, even though the past quarter hasn't been fantastic, the outlook shows that there is more optimism as we come to the all-important quarter, which is the Christmas quarter. In fact, I don't want to scare you, Ini, but I heard on the radio this morning that there are just 100 days to Christmas, which is quite frightening if you're a parent. But if you are a business, particularly those in manufacturing, this is a really important period. So I think the optimism is that perhaps they'll be able to adjust some of the consumer habits, and they will pick up some of the lost trading in that all-important quarter.
Yeah, well, a very active quarter also for that last one. But what about investors? I mean, back here in Nigeria, we're on holiday, the markets are not open, but I'm sure that's not the case in the UK.
It's not the case. It's holiday and you're still working, as always,
Yes.
but the all-share is not in great shape at intraday. I think we're all waiting to see what happens with interest rates in the US later in this week. The all-share's down 0.07%. FTSE 100, the blue chip, that's down 0.08%. In the domestic market, that's down by 0.02%. In the currencies market, the British pound is trading up against the US dollar by 0.51%, up to against the euro by 0.15%, but down against the Japanese yen at intraday by 0.04% in A.
Thank you so much, Juliana. Enjoy the rest of your day.
You too.
All right, now let's head to Berlin and see what's going on there. Well, inflation has tapered in Nigeria. I guess it's not just Nigeria. Perhaps the season of high prices is going down. I hope. Well, Lars Halter has to tell us now what's going on in Germany when it comes to inflation. Hi, Lars. Good afternoon.
Thanks for having me, Ini. Yes, indeed, gas prices have dropped over the past few weeks, and that means that the upcoming heating period could be a lot more affordable for people across the country. Now, here's a little background. When Russia started its war in Ukraine, it was immediately hit with sanctions by the West, including Western countries ending all energy imports from Moscow. Now, Germany, more than any other country, had so far pretty much depended on Russian oil and gas. And to stick with the latter, absent of Russian gas, supplies were low. Demand, of course, stayed about the same, so prices shot up, leading many to turn the temperature down in their apartments and braving the cold simply because they couldn't afford higher bills. Now, gas prices are down, and that is a huge relief to everyone still heating with gas, which is still about half of Germany's households.
Oh, so sad there. But what about investors? Let's head straight to the markets.
Well, this week, all eyes are on the Fed in the U.S. The central bank is expected to lower interest rates there on Wednesday, but investors want to know details on how exactly they're looking at the current economy. Are the central bankers worried at all about a recession, or what exactly will they say in their statement that usually goes along with a rate decision? Because those details are going to be important in guiding markets. higher or lower, because a rate cut doesn't necessarily point markets in a certain direction in it by itself. The devil is in the details. So this week and in coming weeks, investors will work overtime to parse economic data and find their way through the numbers. And that's mostly true, of course, for U.S. markets. But since U.S. markets are still a bellwether for global markets, investors in Asia, Europe, and Africa are likely to focus on the same matters.
All right, Lars, thank you so much for that. Let's come to the continent. All right, Lars. Sorry. Okay, so now let's come to the continent, Africa. See what's happening. We're starting from South Africa, where the government there has plans to attract more professionals to its skills starved economy, that's what it's called, through the introduction of a nomad visa for remote workers, which has been slowed by the need to amend tax regulations. The impediment comes after an initial delay where changes to the visa regime had to be temporarily withdrawn because of mandatory public consultation procedures which hadn't been followed. President Cyril Ramaphosa announced his intention to introduce a remote working visa in his 2022 State of the Nation address. The country's Home Affairs Minister, Leon Schreiber, says that there's just a tax-related matter that needs to be addressed in the regulations, and once that's done, the department will commence with the rollout. South Africa's Byzantine work permit regime, which means that securing a work permit can take well over a year, has been flagged as a hurdle to economic growth by both the presidency and the country's main business organizations. Still, a backlog of more than 300,000 applications for all kinds of resident permit has been halved since the new cabinet was announced on July 30 after the formation of a coalition government. And from there, we go to Egypt in North Africa, where food exports recorded 180,000 tons in the week through September 13, marking a 7.7% surge from the previous week. This is according to the National Food Safety Authority. This impressive figure reflects a wide variety of over 616 fresh fruits, vegetables, and other food items. Egypt's vegetable exports portfolio boosted 64 different types of varieties with a total volume of around 40,000 tons. Beans were the top export at 15,000 tons, while sweet potato at 11,000 tons and onions recorded 10,000 tons. Meanwhile, mango was the top exported fruit last week with 14,000 tons, followed by pomegranates at 7,000 tons and strawberries at 6,000 tons. Around 29,000 tons of 53 fruit varieties were exported. Don't you look forward to the days when we, Nigeria, can also count the vegetables and fruit that we can export, and we do have the potential. All right, let's find out what Ladi thinks about this. Perhaps he's more concerned about Dangote Petrol, which he hopes will be in his car, but with this red board, I don't think you have any profits to buy that.
Right now everyone's trying to get that Dangote fuel in, but who knows who's going to be getting that in.
Yeah, maybe that's why the market is bleeding.
Right, so 2.34% down, that's for Bitcoin, so it's red on the screen.
Yes, it is.
Right now, but definitely we're going to get back to that Dangote fuel at some point, because I'm looking for affordable fuel. But let's see, this market, you see the stable coins getting in the green there. So when there's a volatility, we see investors trying to get into stable coins to try and save, some of their profits. Let's look at the sentiment in the market. Still a fearful market. We've not gotten back to the greed stage yet. It's still fear. 39 points out of 100. Looking at the fear greed index, helping you track when to enter or leave the market. So it's a fearful market right now. We know what Warren Buffett says about fearful markets and greedy markets. So you can use that to your own advantage. Then let's look at the crypto headlines. We see with the airdrops, everyone expecting some kind of airdrop right now. But we see the Catizen, the developers have sent out information on how they're going to distribute most of the airdrops, and that was the launch is for September 20th, and it's getting really rockier this time. We see some of the players complaining about the previous delay and other moves by the developers. But now some players are angry about the airdrop allocations that were revealed. It was reduced from about 60% to about 30%. So they're not happy with that. And definitely other airdrops to look out for, Hamster Combat and all of that. Who knows if that might be the same thing. But Bybit, the second largest crypto exchange by volume, they bagged a license from Dubai, a Dubai regulator, so they're going to be able to operate in Dubai and onboard customers. All right, let's bring in Shehu Dania now as a CEO, Alpha Geek Technology, joining me via Zoom. Great to have you on the show.
Hi, Ladi. Welcome back.
Thank you so much. So it's Catizens now. We're seeing the players not happy about the airdrop plans by the developers. So talk to me about if this is a sign, of things to come for most of these airdrops.
No, so basically, it's a common issue within the cryptocurrency space. That is, there are always misaligned expectations, and then maybe sudden change in the project plans, and the developers then end up not communicating properly to their community, or probably communicated, but when people are fully focused on what they're about to get, they probably do not see those little communications that actually specify that there's been a change in the tokenomics that was earlier on put out. So a lot of people, of course, right now people are sad, or they feel that their time has been wasted, because the developers initially teased, like significant amount, I think about 43% of the token supply that will go towards, airdrop to the players. And then all of a sudden, of course, they will have their reasons. Maybe some market dynamics have changed.
Right, and definitely, most of these airdrop games, it's really most of them are really time consuming. You spend a lot of time doing a lot of tasks.
Very time
the next thing, they give you, some call it dust at this point. but how can these platforms make sure these tokens, even after distribution, actually stay valuable?
I want to believe that most of the people who participate in these, like the game tokens, they should understand where it's coming from. What are the fundamentals of the projects? For the token itself, I think some of them that I've seen, I've actually tried to experiment with, they have things that they sell, like NFTs, or basically some points they get people to actually pay within the ecosystem. But of course, in the long term, what is the actual business model? I think the actual business model is advertising. So they do all these things to get all these people to sign up with the promise of airdrops, and then they're constantly advertising. They're getting money from other sources and constantly advertising to these people. So they go out and say, hey, here I am, I have a community of over 20 million people playing my game, so you can come and advertise to them, while the other people just get pennies.
All right, before I let you go, so these platforms keep springing up every day. Talk to me, who is the product when it comes to these airdrops? Are they really doing these players a favor?
They are not doing it to players. So the currency of the future, or the currency of now, is time, and they are buying people's time, they are buying people's attention, and they are marketing different things to them. So if you look at most of all those games too, like I said, they are marketing different products to them, So while all these people are scrambling for those dust, as you call it, they are constantly, the game is on them,
right?
To be told.
All right, Shehu Dania, always great having your perspective, CEO, Alpha Geek Technology. Thank you so much.
For having me.
All right, so the big question now is it going to cook, or are you going to get dust? After all of the effort you put into all of these airdrops, and you just get
your data,
and all the data, time,
and your fingers doing all the tapping. You know what, Ladi, you would ask, are they doing it for the players? Obviously, everybody wants to get value.
Right.
If I'm playing, it's because I have a target.
Right.
And then the platform themselves, they also have their own target. So
yeah.
Ladi,
so who's the product
Take care of yourself.
Okay, the players are the product.
Take care of yourself. All right, so that's it on the program. Thank you so much. It's Monday. That means we still have 4 more days that you can get this information. But you can always go to our YouTube channel to relieve the moment. But don't forget, tomorrow, 10 a.m., Ladi Williams will be here. Inflation is down for a second month. A lot of people want to hit the television and say, that's not true. I know how much I'm paying. You can get the reality tomorrow, 10 a.m. with Ladi Williams. I'm Mini John Mepa. Bye-bye.